Hello viewers, I am Untitled Chapter and back with my video on penny stocks. Today I would be speaking about a penny stock, specifically Titan. I would give you some recommendations which I feel we should invest in. Of course, please do take my recommendations after you do adequate research on a particular stock or the industry. Now, what a penny stock specifically is? A penny stock is a particular stock whose value is fraction of a denomination of a dollar, or so to say, quote unquote, priced at a very low range. For example, let us take the example of Titan. We all know Titan, it is meant for the watches segment, but also Titan has also another segment which has shown a huge growth over the years. The particular segment is the jewelry segment. Before, in the 2000s, Titan was a penny stock. It was priced at rupees 1.35 in 2000s. Today, in 2022, Titan is priced at more than rupees 2450. Do you know why? Can we even imagine 31,000% growth in a span of 21 years? Oh yes, Titan has grown. For example, had anyone invested rupees 1000 back in 2000, that person would have gained more than rupees 14.5 lakhs in Titan. The reason is very simple. Titan had two divisions. One is the time division, one is the jewelry division. The time division of the watches segment had a pretty much stagnant growth. It grew over the edges. We all know Titan is a brand, especially in the watches. But Titan made more profits in the jewelry segment. At a time when Tanishq was not there in the 2000s, and when we are having a speculation that gold prices will increase, diamond prices will increase, Titan also shot up with the economy. A small cap company is basically a company which usually takes a large amount of debt, as you need debt to grow your business. Except for the IT sector, this is a happening trend. Please do comment in the section below and tell me, why do IT stocks take a lower amount of debt and why do they invest on equity capital? I would be happy to hear on that. Now, let us come into Titan. So, Titan grew from rupees 1.35 to 2450 plus. Investors like Mr. Rakesh Jhunjhunwala, Mr. Radhakishan Damani have the eye of value-based investing. They have the eye to take or pick up stocks at such cheap valuations, and they make a huge amount of money. Now, what are the stocks that we are projecting or we are looking at in, say, the next 10-15 years? Well, I'll give you some of the recommendations. One of my favorite stock is Manali Petrochemicals. A petrochemical stock industry is petrochemicals. It has a very stagnant growth over a certain period of time, but growth has spiked in the certain years. Even Titan was stagnant for 4 to 5 years, after which it really showed its growth. Now, what are the things you should look at when you are identifying a penny stock? Number one, you should look whether the industry is going. For example, if I see an innovative startup tomorrow and I see an innovative automobile is being manufactured, but it is not adhering to our EV vehicle norms or BS4 norms, then that is useless or futile. You should have a stock suggestion which is growing with the happening industry trends. Only then that company can survive in the long term. I will be talking about two stocks which I think is, or we should invest, two penny stocks which I will invest. Of course, do some research before you invest. Number one is Mammalian Petrochemicals. It comes under the specialty chemicals industry. For the last 5 years, its revenue has grown by 12% versus the industry average of 3.5%. Not only the revenue, the net income has also shot up by 33%, through almost 3 times more than the industry average. Also, it has gained subsequent market share, and the market share has shot up from 1.5 odd percent to 2+%. It is a high beta stock, means it is very volatile, and it is about 3.7 times volatile than the Nifty 50. What I like about this stock is, in spite of being a petrochemical stock, it has shown significant and good growth figures, almost 213% growth in one particular year. And it also have 45% promoter holdings. We need to see whether this matures into a penny stock, into a multi-bagger stock, and also whether it can sustain in the long term. Coming to my next stock, this is a stock of the infrastructure sector, and as we know, the budget has a very good incentive towards the infrastructure sector. A stock which has both PE and PB more than Larsen and Toubro. Maybe one can say that it is of a high valuation, but again, it has yielded 350% growth in the last 1 year with nearly 70% promoter holding. The stock really looks promising to me. I am ready to bet on this stock with 83.52 price earnings, which is much greater than price earnings of the industry. It caters to, it has constant mutual fund holding, means the mutual fund houses have retained the stock. The stock looks promising to me in the long term, though it has very high PE and PV ratio, but the growth figures and the construction industry in which it is in shows a good promise for it to grow in the long term. But there is something I would like to tell you viewers. Please don't get trapped into the financials when you identify a penny stock. Especially when you look at the technical chart, some stocks will show you circuits, 5% growth. For example, Vikas Lifecare. Today I am making the video on a Friday, the 4th of February. Vikas Lifecare has hit 5% circuit, and some of you may be saying that we are bullish because Nifty has shown a little bit of a downtrend, Bank Nifty downtrend. Why is Vikas Lifecare growing? There is a lot of chance of manipulation in these stocks, and hence viewer, I would be coming with a video on manipulations of small cases and penny stocks which you should avoid. Please stay tuned for updates, as I would caution you so that you can protect your capital and grow your money. Thanks for watching my video. Please do like, share and subscribe.